Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. We are going to be talking to our guest today on a term that I heard from him about maybe a quarter ago, about the possibility of India looking at a decade wherein we could see a manufacturing renaissance. And we've spoken to a few companies about this, and they've alluded to the same as well. There are telltale signs of this happening. And Hiren Ved, who first brought to me the possibility of this being a decadal long term, joins in today to talk exclusively about that. And Hiren, thank you so much for taking the time out and speaking to us. I hope all is safe.
Yes, thanks, Niraj. Thanks for having me on the show.
And the pleasure is ours. Hiren, before I get to the whole manufacturing renaissance process, and we'll talk only about that for today's show, can I just briefly ask you, what do you make of the jitters and the nervousness in the markets in the last couple of days? Is this something that will pass, or is this finally a realization that trees don't grow to the sky?
Well, I think, Niraj, I think that, first of all, indeed, I'm very clear that we are in a long bull market. But I think it's quite easy to get carried away in the bull market. We have seen some very parabolic moves in some of the mid and small cap stocks, which kind of sometimes confound you as to what has changed so dramatically for the stocks to go up, 20, 30, 40% in a month's time, right? And clearly, there was some kind of a speculative bubble which was building up there. And, I think occasionally we will see unwinding of these happening as we move along, because, it's very difficult in this market to pinpoint who is doing it, but whoever is doing it, I think these, some of these things are quite unsustainable, right? And especially when it happens to companies which are, where the float is very low, and so on and so forth, there tends to be some kind of a bubble that builds up like that. So I think it's good and healthy. I think our regulator has also become proactive. They have this, ASM mechanism where if a stock goes up indiscriminately in a very short period of time, there are certain risk filters that go in, which kind of cool down the momentum, and only serious buyers who want to buy and sell, for delivery, are then left in terms of doing that. So I think this is just a symptom of one of the symptoms of a bull market, that people tend to get too carried away, and sometimes expectations are built very quickly into stock prices. What you expect to make in a year's time, if you make in a month, clearly that's going to be unsustainable.
Yeah, and we see estimates being laid out for what? Yesterday I saw a report which probably on Avenue Supermarts. Nothing against the analyst, by the way. You sure knows it more than me. But when you try to pencil in 2051, it tells me a thing or two, really. But Hiren, let's talk about this thing that I heard from you about 3 months back, and so emphatically, right? The manufacturing renaissance. Can we talk a bit about that? I mean, what is it that you believe is the building, or are the building blocks now which are different from what has been traditionally for this to be, as you said, a renaissance?
Yeah, so I think, amidst the, my sense is that amidst this very high profile B2C internet tech businesses, which are at the forefront of the news and the wealth creation and the value creation and the IPO boom, etc., there is a silent but very firm revolution which I believe is brewing in India's manufacturing sector. For too long, I think manufacturing was in some form of a, big comatose if I may use that word, especially after the global financial crisis in 08-09. If you really look at the kind of sectors which created wealth, those were largely in services and consumption, right? So you had the great consumer names like the Asian Paints and the Levers and the Nestle's of the world, and that entire cohort. And you had the private financials and the NBFCs, the service sector, which really powered growth. As you know, services as a percentage of GDP in India is very high. And if you look at many of the Asian tigers and the countries which have become developed, they all grew on the back of manufacturing, while India grew on the back of services and consumption, right? But I think there is going to be, and that doesn't mean that services won't grow from here onwards. But I think the time has come for the next decade or plus where there is some mean reversion which is likely to happen. And all the essential elements that are required to power manufacturing growth or revival of the manufacturing growth, I think are present. And I'll name a few. I think what is underappreciated and what this government did, I think very early last year, around the pandemic or post the pandemic, was overhaul of the labor laws, right? There were 44 central labor laws which were subsumed into just 4 codes and wages, right? You cannot now suddenly go and announce a lockdown or a strike. It's easy to fire people if you have less than 300 people, right? So that was all focused on, really changing the archaic labor laws, which were inhibiting manufacturing to come into this country. And look at what happened, right? I mean, we were a great textile hub in the early 1900s, right? And recently, in the last few decades, we gave away our competitive edge to China, Vietnam, Sri Lanka, Bangladesh, right? That textile industry went away from us. Luckily, we created a competitive edge in services, in IT services, in pharma manufacturing, etc. But I think that there was a big lesson there that, our labor laws needed to be overhauled. So I think that is one reason. Second, which we all talk about quite so often, which is the China plus one strategy, which is that global multinationals are looking at a sourcing base beyond China, right? And that has happened partly because China has become relatively uncompetitive because wages are rising. China is becoming a prosperous country. So, no longer are the wages so competitive as they used to be. And also China has dialed back some of its policies when it comes to giving subsidies to their manufacturing export sector, curbs on pollution, and, trying to clamp down on extra capacity and so on and so forth. And also a little bit of the geopolitical, issues have got mixed, which is that, the two major economies are at loggerheads, the US and China. US is continues to remain one of the biggest consumers of the world. And, people are looking at a more friendly country where they could have one more option to source. The third is that the government realized the potential, and this is something that a lot of policymakers have spoken about, how when the service sector grows, you are able to create employment, but you create employment for slightly better educated and skilled workforce. What do you do about the blue collar workforce? What do you do about the everybody cannot become a software engineer and do blockchain and do digital and stuff like that, and how do you employ so many graduates and young people coming out, or semi-skilled people coming up. And you need a thriving manufacturing sector to do that. So the government looked at the PLI schemes where they have, they want to incentivize mobile manufacturing, pharma API, medical devices, white goods, solar panels, telecom equipment, food products, auto components, right? I mean, some of that is focused on reducing our import dependence. Like virtually everything electronic that I and you use is imported from China, right?
Yeah.
You can't have that. I mean, suddenly your supply chain can become very challenged, as it did during the COVID crisis in February, where you said, hey, all solar panels are made in Wuhan, and that's where the world gets their solar panel. And also, I think to some extent, globalization was taken to a completely new peak, right?
Yeah.
The whole just-in-time, single source manufacturing to bring down costs and improve productivity was a good thought, but I think it was stretched to a limit. And then people realized that, hey, what if there is, a COVID kind of a situation where your source of raw materials is locked down and you can't access it, or there is a fire, or like what we are seeing on the chip side, right? I mean, there are 4 large chip manufacturers in the world, and if there is fire in one, if there is a some issue somewhere else, the world is just gasping for chips, and you can't have. So I think we are going to see a little bit of, for a lack of a better word, we are dialing back some of that globalization to deglobalization. The Atmanirbhar, every country has to think strategically and say that, what level of dependence do I need to have on some other country for something which is very critical? Let's say something like medicines, right? I mean, just imagine if we did not have 2 domestic vaccine manufacturers in this country, and we had to vaccinate 1.3 billion people on imported vaccines. I mean, all hell would have broken loose.
For sure.
It would have taken 3-4 years to vaccinate our population. And then what effect it would have had on our economy? Because if you could not vaccinate, you could not start up things, right? I mean, it would have been a disaster. People don't realize this. We are lucky that in India, we have a phenomenal manufacturing capability in pharmaceuticals. And we got saved because we had a domestic industry to fall back on. And I think all these are lessons that the world is learning. And I think that is what is driving, in my opinion, the manufacturing renaissance in this country. And the last point is that I think as demand comes back and you will see that capacity utilization starts to improve, I think there will be a need for a new capex cycle to start, and which will kickstart manufacturing. And then the last, but not the least, is that after many years, we are seeing the commodity cycle come back. And usually capex and manufacturing does well when commodities tend to do well, when we are in a bull market in commodities, right? And you look at the deleveraging of the balance sheets that have happened of the corporates. The balance sheets are more healthy today than they were in the last decade.
Yeah.
In fact, 2008-9 corporate sector was highly levered. The manufacturing sector was highly levered. And it has taken us a decade plus to delever these balance sheets, and a raging bull market in commodities to delever the balance sheets, right? So I think all the elements, and yeah, sorry, I forgot one more, which is the cost of capital.
Of course.
Right? I mean, interest rates are down today. Cost of capital has fallen. There is tremendous liquidity which is there. So I think if you add up all of this, right? China +1, cost of capital, capacity utilization coming back, deglobalization, and the government focus on reviving manufacturing through the PLI schemes. I think it's a heady cocktail, in my opinion.
Sure. No, point well taken. And I believe this is what gives you the confidence that this is not necessarily a passing or a 6-month, 1-year, 2-year theme. This could actually be a multi-year theme in place.
Yes, I think it's a multi-year theme in place. India always had a competitive edge in a few manufacturing areas, generic medicines being one of them. But I think that is now moving to beyond generics to APIs and intermediates and to specialty chemicals. So that area is widened. And we were always good at auto components. It started with Sundaram Fasteners in the mid-90s, selling radiator caps to General Motors. And that's how the whole revolution of forgings, castings, auto components started in this country. But I think it will move to many, many, many more sectors now.
Hiren, one could argue that some of these themes have been discovered, yes, accepted to an extent. The valuations may show that some of these themes are well digested as well. I mean, the PLI for mobile phones, it's not very capex heavy, as I understand from the companies themselves, but yes, the valuation seem prime. Therefore, my question to you is to try and spend some time and tell us, where do you find there are some 15, 20 PLI schemes that have been approved as well. And that notwithstanding, where within manufacturing do you find the potential for this long gestation growth and the possibilities of valuations not having gone bonkers, or maybe the growth rates being so potent that the high valuations won't matter? Can you spend a time on this?
Yeah, see, I think so there are 2-3 things, right? I mean, electronic component manufacturing was not a big area for India. It's very new. Unlike auto components or generic medicines, this is a very new area, which means that by that logic, there are fewer players today which are there. And within that fewer players, there are even fewer players who are listed. So what happens is that when you get to play, let's say, just a Dixon or an Amber, right? And people get convinced that this is a huge multi-decade opportunity, then some of that gets priced in within that small universe of companies, right? So to some extent, the premium that some of the companies in the electronic manufacturing space have got is a combination of 2 things. One is that there is not enough listed plays. And secondly, what the market is telling you is that this is a multi-year opportunity. And therefore, I want to price some of that growth today for something which could, to use a simple analyst framework, I can do a DCF on this business because this will last for 10, 20 years or more in terms of manufacturing. And that's where the valuations are also there. Similarly, I think the same thing has happened in specialty chemicals, right? 2-3 years ago, the largest specialty chemical company had a market cap. I mean, everything put together, the market cap was like less than 10-15,000 crores today. And today, these companies are trading at trailing 50, 60, 70 times earnings. Again, the reason is that the market is sensing that this is a big multi-year growth opportunity. And therefore, the entire cohort has got re-rated, right? They are now trading at FMCG kind of valuations. Having said that, but, A, because growth is high, B, generally speaking, ROCs are very decent in this industry, right? So, you have a good asset turn, you have good margins, And so maybe there in specialty chemicals, maybe the entire cohort maybe I think trading at valuations which are baking in a lot of the future growth today itself. But having said that, we continue to be bullish on specialty chemicals. I think where it is not yet fully priced in and is beginning to get priced in is one area is auto components, right? And the more auto components or the engineering pack, right? So bearings, forgings, castings, auto components. And the reason why this has not yet gone off, the valuations have not yet gone off the roof, is because the auto industry itself is struggling has been struggling for the last few years. And that kind of rubs off to the ancillaries as well, because, one thing or the other has been happening to the auto industry. Earlier it was the NBFC crisis and availability of capital. Then it was the whole transition from, the technology transition from, ICE to EVs, a lot of policy flip-flops, right? But I think that I see a very strong revival in manufacturing in that area. And many of those companies which were largely focused on auto components have also, over the last 8-10 years, they've broadened their spectrum. They now do non-auto, which includes defense, aerospace, renewable energy. So they widened their footprint in manufacturing. And manufacturing is not very sexy, right? As I said, what is really what investors are besotted with is the B2C consumer internet plays. That's where all the capital is going. And which means that there is underinvestment in manufacturing. And that's why I think structurally, right now in the short run, these manufacturing companies may face margin pressures because of commodity price hikes. Energy prices are going up, metal prices are going up. But longer term, I think the stage is set for margins to come back once commodity prices cool off a little bit. Because there is huge underinvestment in manufacturing. Nobody wants to set up capacity in manufacturing, right? When I speak to the global auto OEMs, right, they are shifting their investments to electrification, right? So who's going to invest in manufacturing, right? So I think the Bharat Forges of the world and, Sundaram Fasteners of the world will see a huge boom in a couple of years as people want reliable, high quality manufacturers, to supply to the OEM. So I think that's one area where things have not yet been fully discounted. And then there are certain emerging areas where, again, you don't have too many plays, like medical devices. You don't have too many large companies that investors can play, or IT hardware, or EV battery manufacturing, or telecom equipment, white goods to some extent, with some of these listed players you have. So these are some areas which are still has potential to grow, in my opinion.
Okay. Hiren, one question. In some of these pockets, as you mentioned, there have been either some false starts or due to some policy intervention or a regulatory change or otherwise, things haven't moved ahead very smoothly. Autos, for example, as you said, right? I mean, or textiles, wherein for a long time there has been some promise, but it hasn't quite delivered. Now it's showing some promise. What can go wrong, or what do you, as a large investor who manages such large oodles of money, how do you convince yourself that no, this time around let me take a large bet, because there is something out there which tells me that it won't be a stop start again? What is that reason in autos, in textiles, in so many other pockets?
Well, I think what convinces me is, one is that this time the government is very, very serious in terms of the policy momentum that we have seen in manufacturing, right? Secondly, I think that if you look, a lot of work is also happening on logistics and supply chain. One of the reasons, see, there were several reasons where India lost competitive advantage, right? All of those are turning favorable. One of those, as I said, was labor laws, which have been corrected. But there were other issues. Cost of capital was too high. That's being solved. Globally, interest rates are low and liquidity is abundantly available. Secondly, this whole Gati Shakti program that the government has started, right? I mean, you see the investment in ports. You see the investments. We will have the entire high-speed rail network, which will be up and running, which will connect the east-west, north-south, the freight corridor, the dedicated freight corridor, right? So there is a lot of investments that is going in logistics, in supply chain, the road network, the rail network, all of that, the port network, all of that is getting better. And I think therefore, I have more confidence today than we had in the past. And, Mr. Modi has always focused on, this government has always focused on the supply side. If you look at all the reforms, of this government, they are largely focused on unclogging the supply side, right? So investing in roads, investing in ports, investing in freight corridors, SEZs, right? So I think the enabling environment is now being put in place. And secondly, I think, China, which was the largest manufacturer, that is undergoing a seminal change. So when global supply chains change, those equations change, there is always a massive opportunity which is available. And you have to be there to capture that opportunity, right? I mean, look at it, simple things like, for example, shoe manufacturing, right? I think, import duties have, and the other way the government is doing is that they have increased custom duties on a lot of intermediates, wherever they think India can compete and has the manufacturing base, the government has gone and increased custom duties, whether it is footwear, whether it is chemicals, right? To encourage local manufacturing to come. And I think India has got that manpower. I mean, Indian industries have become globally competitive in the worst of the environment, when the labor laws were not good, when electricity was not available, when logistics was not doing well. I mean, if we have done so well when our infrastructure was so bad, just imagine what we will do when all of this becomes a tailwind instead of a headwind, right? I think it's unimaginable. And, I think the other point I must mention is that manufacturing as we see it earlier versus as we see it now is also changing because there is more software element within manufacturing today. There's more automation within manufacturing. And there India has got a great competitive edge because you have a great software base, right? Which can fuse, there is IoT. Today machines are, more intelligent. They have more software riding on them. There are sensors. And all of this needs to be powered by software. And if you look at it, the best global manufacturing companies have, why do they have software center? Bosch has one of the largest, captive centers in India, which develops these software for their global manufacturing footprint, right? So I think that's the edge which other Asian countries don't have. that as manufacturing becomes more software driven, India's inherent competitive edge will come to the fore because India inherently has capabilities.
That's a very important point. And interestingly, Hiren, yesterday or day before, I was talking to LTI, and Sanjay Jalona was telling me that there are companies in the US who are now so increasingly dependent on Indian software companies because of the great resignation theme, that they have no choice but to move to automation. And Indian software is powering all of that. So sorry, you want to make a point?
No, you're absolutely right. In fact, if you look at this whole ERD space, right? And we took an early bet on the ERD space, which is largely design, manufacturing, across sectors, right?
Right.
So you take stocks like LTTS, Tata Elxsi, right? I mean, these are companies which are benefiting because they are helping the so-called change in the manufacturing landscape, right? Moving to the electric vehicle. Companies like Tata Elxsi, LTTS are powering the software and the change that we are seeing in the transportation industry. Right?
Yeah.
So I think one way to play the change in the global manufacturing landscape is also some of these ER&D software companies, which will benefit out of that.
True. By the way, before I ask you the final question, we did a very interesting interview with the tech head of KPIT, which is also into automotive engineering, and he reimagined the future of mobility. You might want to get in. I'll try and send you the link after this interview is done. But it was a lovely, insightful interview about what could happen to automotive a few years out. Final question, Hiren, succinctly, if you're so bullish on manufacturing, is it possible to get a sense of what proportion of your money are you betting on this? I mean, is it an outsized bet that you're taking as a percentage of your overall portfolio?
I think directly, indirectly, along with the ER&D, our exposure to some of the ER&D software companies, I think 1/3 of our portfolio are now directly, indirectly dialed into manufacturing, right? So we have exposure to the ER&D software companies, but we also have exposure to, let's say, names like Bharat Forge, Sundaram Fasteners, Dixon, so across the range, pharma APIs like PVs, even in injectables, Gland. I mean, there are a lot of companies across healthcare, engineering, auto components, and the ER&D software space. So we have, and specialty chemicals, right? So we've taken a basket of all of this, and almost 1/3+ of our portfolios is now focused on taking advantage of what I believe is a huge manufacturing renaissance, powered by an overlay of digital capabilities, which will drive manufacturing for the next decade plus in this country.
Well, if somebody was not convinced when you spoke the first time, I believe today's 35 minutes were convincing enough for anybody to try and explore this and believe in this theme. And thank you so much for spending this valuable time, Hiren, and giving us these insights. Lovely having you.
Well, thanks, Niraj. Thanks for having me on the show. Always a pleasure.
Thank you.